Welcome to another video of my 5 cents. As usual, before I get started, please do me a favor and hit the like button, and if you have not subscribed yet, please smash the subscribe button, and also remember to click on the bell icon so you guys will be notified of my latest video. And let's get started with today's video. Invest now or wait for the long awaited crash or recession. And for the past few days, I have received several emails saying that they are scared to invest now because they saw several articles and news saying that the crash and recession is supposedly coming soon as 2020, which is just around few months to go, and it seems so stupid to just walk, or in our case, invest right into the trap. And in case there's anyone does not know what consider a market crash, basically market crash is when the stock market index drops significantly, as in double digit in percentage, to be precise, more than 20% in just few trading days. As for recession, it is typically recognized after 2 consecutive quarters of economic decline of GDP and also increase in unemployment rate. Of course, it's not as simple as this. This is just a general idea of what recession is. Certainly, I have no doubt that the crash and recession will come. It will come eventually. It's just a matter of how much damage it will cause and how long it will last. And I am not trying to fearmonger here, but think of it this way. The market has been on steroids, especially for the past 5 years, as you can see from the graph. Basically, it's a non-stop rocket style of uptrending, either with the help of government, stimulation, or organic growth. But nothing lasts forever. What goes up must come down eventually, and the impact will be magnified depending how high it goes. Only in the past 2 years, the market have been waving a lot, but mainly due to the trade war tension between the China and the US that started around 2 years ago. But that does not count as a crash because it does not drop more than 20%, and it recover right after a day or two trading days. Nevertheless, the question is legit a concern for all of us. Okay, so now go back to the main reason of this video. Should we invest now or wait for the crash or recession? It's time for Q&A time. Okay, what will be my answer? Take a guess. Pause the video and leave your answer down in the comment below. Ding dong, ding dong, ding dong. Okay, time's up. And my answer is definitely start invest now. But remember, do not forget about it. I repeat, do not forget about it. That is a big no-no. Imagine if you keep waiting for the crash or recession that the expert has been predicting since like 6 or 7 years ago, you will be missing out of the potential gain. Be it invest for stock, fund, gold, bond, or ETF, you need to consistently check it. And of course, regularly topping up, aka DCA, dollar cost averaging, on those you believe, research, and trust the potential of your choice. This is one of the unit trusts I bought last year around September 2018, if I'm not mistaken, and I have been DCA every single month ever since. Imagine if I were to wait for the so-called crash or recession since the 2016, I would have lost the potential gain due to the so-called expert and news have been reporting the crash is coming soon. And here is another fun unit trust I purchased also last year, 2018. And so I am done waiting for the so-called crashes to be arrived, and so I'm done waiting and make my bold first move and invest bravely but logically. See the graph in the monitor. Now, if I am still waiting for the crash, I would have still be waiting and miss the profit currently I get. Invest is for long term. We do not know that when and how the market will crash or how long the recession will be. But one thing is certain that a good company will survive the hardship. The biggest hurdle and controversial is not the market fluctuation but human emotion, especially fear and anxiety. This will cause you to lose big or even lose it all due to unable to think and act logically. That being said, it does not mean that you can go on a buying spree, buying and grabbing all those things that have tumbled down. Instead, check on their financial record, annual report, future prospect, and understand the company. I can't tell you which stock worth your attention as we might not be in the same country. However, in my personal opinion, there is some sector worth to be called defensive sector, such as REITs, healthcare, and finance. So if you are at a loss to which to start, you may start from those sectors. But before you rush into buying or researching for the invest, have you at least set up your emergency fund? This is a must before you start investing. Actually, there's another two type. If you are interested, link down in the description down below. Okay, so after you save up for the emergency fund, then only focus on your investment. After all, if recession come, worst of all followed by depression, high chances it might affect your salary or even cost you your job. Some of you might even wonder why the industry experts have been calling and predicting all the market is about to crash, will crash, or gonna crash soon. And it has been going on for about 6 years or so. As of this video is made, the most recent sign are the treasury bond have inverted yield curve, and some experts are very certain that when the 2 years bond surpasses the 10 years bond interest, recession will follow, as seen in the 1990s, 2001, and 2008. As seen in the chart, as you can see, when the 2 years treasury bond overtake the 10 years treasury bond, recession will follow right after. Sounds very convincing, right? If you guys wonder what is inverted yield curve, here's an example of a inverted yield curve graph. Yield curve essentially means that a line on a graph that shows the interest rate of the bond that have different maturity date. There are three main types of curve: up curve, upward slope, downward slope, and flat. Ideally, it should be sloping or curving upwards, since most of the time holding bond longer means higher interest rate. So essentially, the longer you hold the bond, the higher profit you should get. But as of recently, there's a few incidents where the yield curve inverted, meaning holding shorter terms yield higher profit. Thus, this sent fear to the expert, as in the past, recession happens after the inversion, as you can see from the graph here. If you guys interested more in the inverted yield curve, I will leave some link related to the news about the inverted yield curve in the description. So check it out if you guys are interested. And that's it. Thanks for watching. Like and subscribe if you like it. Thanks.